Hi everyone, I'm James, market strategy at Smart Securities. Tonight I'll talk about Forex CFD. Most importantly, how can technical analysis help you crack Forex CFD trading? So the next bi-weekly session will fall on the following Thursday, 2nd of March, which I'm going to talk about Visa stock analysis. So please tune in for that as well. Let me begin with some disclaimer first. This presentation is for education and sharing purpose only and does not constitute to any form of advice. Past performance is not indicative of future performance. You are responsible for your own investment. And currently, Smart Securities would also like to reward new customers who listen to this webinar with $2. If you are a new customer and have not yet deposited money into your trading account, please type in your Smart account ID in the Q&A box. I will then provide your account number to my backend to verify and transfer the cash voucher into your trading account. So please type in your Smart ID in the Q&A box in this Zoom webinar. We are currently offering Forex CFD, but not stocks CFD yet. Very quickly, what is Forex CFD? Forex CFD stands for Forex Contract for Difference. It's a type of a financial instrument that allows traders to speculate on the price movements of currency pairs without actually owning the underlying asset. Having said that, it's all cash settled. To put it simply, when you trade on Forex CFD, you are making predictions about whether the value of one currency will rise or fall against other currency. You enter into a contract with a broker like us to buy or sell a certain amount of currency at a specific price. If the price moves in your favor, you stand to make a profit from the difference between the purchase and the selling price. To put it simply, if you enter a contract to buy pound USD currency pair and you bought it at the price of 1.21169, you would need to wait until the sell price here to go above 1.21169 in order to start making profit. There are a few important things to take note when trading CFD. Number one, there is no commission charge when you buy or when you sell. Meaning to say, there is no commission, but there is a spread when you enter the CFD contract. There is an immediate decrease of your initial positions, which is reduced by the size of the spread upon entering the CFD contract. The price you pay for the currency will always be slightly different from the price in which you can sell it immediately. So the difference here is called spread, which represents the cost of trading. And just to give you a few examples, the minimum spread of USD yen currency pair is 0.7. USD Canadian dollar is 1.5. Euro USD is 0.5. Pound USD is 1.1. Say for example, pound USD spread is now 1.2. It means that you can buy this currency pair immediately at 1.21169, but to sell it immediately, your losses is the spread, because you can only sell it at 1.21157 immediately. In other words, you need to wait until the sell price to flip above 1.21169, which is your entry price, to start making profit. And to put things into perspective, is it very difficult to wait for the price to flip 1.2, which is 0.00012? I would say that maybe it's not as difficult as you think, because 0.00012 is only about 0.0091% of the price itself. If you were to trade the USD yen pair, you need the price to move 0.0052% to start making profit. And in another example, if you trade Euro USD, then you need the price to move at least 0.0047 to start making profit. In other words, it's probably not that difficult for the price to move such a small percentage. And I think this is what makes Forex CFD exciting to many traders. Here is to show you some major currency pairs and its nickname. There are some interesting nicknames like British pound and US dollar pair is called cable. USD Swiss franc is called Swissy, and Euro Swiss franc is called Euro Swissy, and Euro yen is called UP. So all in all, I would say that I only remember the nickname cable here, and you don't really need to remember all these nicknames, but it's good that you have some opinion on these major currency pairs, because these are the 10 major currency pairs that are frequently traded. So the spread is normally quite tight. If you want to trade the minor currency pairs, you can also do so using our USmart Securities app. But please keep in mind that these are considered minor. Not a lot of traders are trading them, and hence the spread is wide, which means when you enter a contract to long or to short, you need the price to move a lot in order to start making profit. Some other essential things you need to know is like number one is all cash settle, and different currency pairs got different margin requirements as well. Some are 5%, some may go as high as 23% margin required. But all the major currency pairs we have over here is 5%. For example, if you want to enter a contract to long 1,000 pound USD currency pair at the spot rate here, and you got it at 1.20619, then the margin required of you would be 1,000 multiplied by 1.20619 multiplied by 5%, which equals to 60.31 US dollars. So this is the margin required. And there is no commission charge when you enter a contract, but there are spread and overnight fee. Before I go into introduce you to individual currency pairs, I want you to look at US dollar index. To me, it is important to understand the overall trend of US dollar index. It is like if you understand the general trend of Singapore STI index, you will normally get a hang of on how DBS, OCBC, and UOB will perform. So sometimes I just feel that if you know how US dollar index will move from here, you will also get a general idea on how euro or pound will perform next as well. So what is US dollar index? US dollar index is used to measure the value of the dollar against a basket of 6 foreign currencies. They are euro, yen, British pound, Canadian dollar, Swedish krona, Swiss franc, and here also show you the weight of each currency have on US dollar index. The biggest weight is Euro, which means Euro has a weighting of 57.6% on US dollar index itself. And you can also see in terms of correlation, Euro is negative 0.942 against US dollar index, which means typically Euro USD and US dollar index move inversely to each other. And you can also see Pound USD and US dollar index has strong negative correlation at 0.823 as well, which means Pound USD and US dollar index move inversely to each other as well. So let's look at the US dollar index chart here. It basically looks like it is still moving higher for now, especially with all the positive economic data releases in the past few weeks itself. On a side note, whenever I actually show the chart here to everyone, a lot of people would probably be amazed on how beautifully the channel here, the support and resistance line were drawn over here. Because if you were to try yourself, if you pull out the same US dollar index chart, you are not able to draw the same resistance support line here because probably you are using the linear line chart. So the secret here is you need to move your mouse cursor on trading views to the log over here and hit the log chart button here. So you can actually use the log chart over here. To put it simply, linear chart have a fixed distance between price level, whereas log chart here have fixed distance between percentage move. So I know it's probably sound quite complicated to many of you. You don't really need to understand the theory or remember the theory. You just need to remember that if one day you face difficulties drawing on the linear chart, use the log chart instead. Then basically you can probably draw your line chart here, the channel, the support resistance line better. So going back to the price movement of the US dollar index, not only we actually seeing that it is moving up in short term, if you zoom out and look at bigger picture here, and you draw the uptrend channel from year 2008 until most recently, you could also see that in long term, it is still an uptrend channel, and it looks like it's continued to move higher as well. So all in all, I would say that it probably wouldn't be surprising to see some upside movement for US dollar index now, especially it has actually corrected I think about 9% from the October high here. So since we established that US dollar index is going up, and we also understand that Euro USD and US dollar index has strong negative correlations. So this is why we should now see some downside movement for Euro USD itself. And to further support my thesis, we could also see that lately Euro USD actually touches the upper band of this downtrend channel and start coming down. So the question you should ask is, if Euro USD start going down, how much downside movement will there be? And to answer the questions, my favorite technical indicator is Fibonacci 2. So basically, my assumption is if the downtrend here goes from point A to point B, from 0% to 100%, then I would also assume that if the price start moving down from point C to point D, it will move the same magnitude as this point A to point B downtrend as well. So what you need to do here is to use a Fibonacci expansion. You just need to copy the movement here to here itself. So my first downside target is 23.6% at 1.03678. My second downside target is 38.2% at 0.99574, and so on. But if you already miss shorting when the price touches the upper band and start coming down subsequently, then I would say probably you may want to wait for the price to pull back and touch the upper band here. Then you put a short over here. Otherwise, if you believe that this will continue to trend downward and you want to move in and establish a short positions regardless the price, then my advice is that you probably would like to place a cut loss level at the peak over here. The previous high over here is probably 1.03. Next, there is opportunity on US dollar, Canadian dollar currency pair as well. So basically it's forming a wedge pattern, or you may call it a triangle pattern, waiting to break above the upper line or waiting to break below the lower line. But my guess here is it will break above the upper line and continue to move higher. Probably the reason for that is I expect it to actually form a flat formations. So this is why I see it could probably go higher. Another reason for that is if you zoom in and look closer and look at hourly chart instead of daily chart, you can also see that it is actually forming a double bottom formation, double bottom pattern, and it actually recently break above the net line here, and it looks likely to trend higher itself. So this is why I'm constructive that it will go higher. And the double bottom target price is 1.36714, and if fortunately it really goes up to 1.36714 and hit the double bottom target, my advice is once it hit, you probably would like to hold on to your long position even longer. Because once the price move up, again, remember what I just said, that it's forming a flat formations. So suggesting that once you break above here, the flat formation is already formed. So it may even break above the high over here, or break above the previous high over here as well. So the previous high over here is probably 1.39 something. And next, let's look at British pound against the US dollar. At first glance, I would say that there is no obvious trading opportunity here. It basically looks like it may form a flat formations. So this is why everyone is probably waiting for a breakout in terms of the wedge pattern. But if you look closer, and you can also basically see that it is this is basically an imperfect inverted head and shoulder as well. So it's just waiting to break the net line over here. But again, it's not fully formed yet. So I would say that we should probably wait for a bit longer. In any case, if you zoom in and look at 1 minute chart, you could probably see that and draw a downtrend channel. You could probably see that pound dollar is moving lower at the moment. So it looks like you probably should be shorting. But I think that there is a lot of false signal using 1 minute chart. So basically, I will just ignore this. All in all, I just think that you should not trade on every opportunities. So it's okay to miss the opportunities, to miss this trading opportunity if you think the trade signal is not strong enough itself. And we may also want to look at USD yen. So it's one of the most popular currency pair, but I often feel that it's tough to enter a new position at the moment. So to understand USD yen, you want to look at, you want to zoom out a little bit. A little bit of history here is it was forming an inverted head and shoulder across 2005 to 2022. And last year, 2022, it finally broke above the net line. And this is why you see the prices here shoot up all the way. And the target price for this inverted head and shoulder was 176. Unfortunately, it didn't go all the way up to 176. It only completed maybe 50% of the inverted head and shoulder target at 152 and plunged all the way back to the net line over here. So suffice to say that some traders probably are still hopeful that it could go all the way up from here to fulfill the 176 inverted head and shoulder target price. So this is why they go in again around 127, which is the net line over here. And the price is currently trading at about $134. So if I would say that if you decided to go in now, you are a little bit late in the game if you decided to go long, because you already missed the chance to establish your long position at the net line over here, because the prices have moved up from 127 to 134 itself. And personally, I would say that I believe in mean reversion for yen. So if you were to look at 5 years average of the yen, it was trading at 114. So to me, the fair value for yen is probably 114. And if you were to look at 10-year average, the average price is 111.91, suggesting that the fair value for yen long-term wise is about 112. So personally, seeing yen trading at around 110 for the past 10 years, it's quite tough for me to believe that it could go up eventually to 176, which is to hit the inverted head and shoulder target price. So having said that, if I were to open any long position now, I would probably want to do some short-term trading if I really want to go for long positions. For example, there is an imperfect inverted head and shoulder pattern for USD yen. So I probably say that it's a good short-term trading opportunity. But because I am biased that long-term wise, it should probably go down to 112, as I see the 10-year mean suggests to me. This is why I would say that I'm more comfortable in holding short than holding long, because I just feel uncomfortable that to think that it can eventually go up to 176. I know this is an unpopular opinion, that betting it could potentially go down some more in mid to long term, but I would say that I would stick to that. Okay, that will be all. If you have any questions, please type me in the Q&A box, and I will try to answer one by one. Okay, so previously you mentioned that try to invest in the first half of the year. How much do you think it will come down in S&P 500 this year? Okay, it's a good question. My answer to that is I don't really know. So recently I see that a lot of investor or trader actually brought up the idea of no landing scenario, meaning to say there would be no recessions, and there would be no soft landing, or there would be no hard landing, and they basically assume that the S&P 500 or the US stock prices would just go up from here. I would say that it's a bit too optimistic to think so, especially we are still seeing higher interest rate for longer itself. And this is why and to think that the earning expectation is probably still quite high for me. So I would say that I would still assume that we will at least see a soft landing scenario, and the S&P 500 will probably fall to near to the previous low, or overshoot the previous low. So what is the previous low? The previous low was doing at about 3,500, and I think we may see some panic in the equity market to drive the S&P 500 to near that low again. But again, this is what I think, this is what I hope. Stock market doesn't really care about what I think, and always remember that Mr. Market is always smarter than all of us. So I am prepared to be humbled by the market, that I'm prepared to be wrong, that the market could prove me wrong, that it just go up from here and does not go down to my target price. This is why I would say that in terms of portfolio positioning, you should be at least 70% invested, so that if the market go up, you won't miss the rally. Because I would just like to repeat itself, one of these dead cat bounces will ultimately turn out to be the real deal and be the bull market rally, and it will just go up for good. This is why I think you should not be holding all cash and waiting and consistently waiting for a bottom to buy. Okay, do you use MACD? Yes, I use MACD, but I seldom use it. I seldom use MACD stochastic along with RSI. I only use MACD when there is nothing I could find on the classical reversal pattern, like head and shoulder, double top, double bottom, or when there is nothing I could find on candlestick reversal pattern of Fibonacci itself. I would say normally I would look at MACD bullish divergence or bearish divergence. But again, even for the case of bullish divergence or bearish divergence MACD, I just feel that the success rate is still not that good. So this is why I favor Fibonacci analysis tool more, because when you draw upon it, it can tell you the immediate resistance or support line immediately. But traditional indicator like MACD or RSI RSI itself, right, doesn't really tell you how much the price could travel. Okay, I got a question on any opinion on AUD/USD. Okay, you give me a second. Let me open up the chart here. Okay, AUD/USD. Okay, let me know if you cannot see this. Okay, so if you look closer, you can see that it's actually doing a little bit of head and shoulder pattern over here. So probably I want to look at hourly chart. Okay, and you draw the net line over here. Okay, so basically you can see that it's doing a head and shoulder pattern. And if you want to short, you should try to establish your short around the net line. So the net line is about 0.68414. Okay, try to establish a short over here. And you also want to find out how much this can go down. So what you want to do here is you want to do a quick calculations on the the head and shoulder target price, which is the length between the head and the low point of the shoulder here itself. So what you need to do here is you just put down the target price over here. Okay, and then it tells you that the target price is probably 0.65438. And then you want to ask yourself whether you think that this profit target is lucrative for you to enter the contract. So you can see that the price now is doing 0.68291 versus the target price 0.65438. Then I will say that the profit target is probably 270 pips itself. So is it worthwhile for you to go in? I would say that the answer is probably yes. And to earn this 270 pips profit itself, right? What is your cut loss level? So normally what I would do is I would set the cut loss price over here, which is the peak of the right shoulder itself. So it is probably 0.69218. This would be my cut loss level. So if I were to go short over here, this would be the peak of the right shoulder would be my cut loss level. And next, I would say that I probably also want to use other methods, right, to verify if I am drawing a good target price itself. So what I'm going to do here is, again, this is point A to point B. From 0% to 100%, I would probably assume that it could also travel from point C over here to point D. So what I'm going to do here is I would just try to draw a Fibonacci expansion. Okay, so that you can see over here that based on the Fibonacci expansion itself, if it repeat the same point A to point B, and then it go from point C to point D over here, the profit target is 100% at 0.67296 itself. And I probably would like to extend this expansions. So I probably would like to look at 1.618% or 1.5% as well, 150%. And you can see that 150% suggests that the profit, the Dow trend could go to 0.65793, or 1.618 suggests that it could go down to 0.65439 itself. So what you need to do over here is you need to draw back your profit level for this head and shoulder. Okay, and then you can see over here is that since the head and shoulder suggests to you that it could go down to 0.65 something, which is similar to 1.618 Fibonacci extension itself, then I would say that you are drawing it correctly. And I would say that at this price level, right, we should probably assume that there would be a lot of buying interest to buy at this price. Or I would say that there will be a lot of short covering, profit taking for this head and shoulder pattern itself. Okay, and next, probably one thing that I would like to do here is the question that I would like to ask myself here is, okay, if the prices were to go down from here, how long for it to take to complete the target price? Because remember, in the early slides, I also mentioned that as long as you hold on overnight, there will be an overnight fees itself. So you also don't want to get caught with all these overnight fees. So how soon can you reach your target price? This is one of the questions you could ask yourself. So one thing I could probably do over here is I would assume that when the price go down from here to here, it actually spent about maybe 44 or 45, about 44 trading days itself. So this is why I would probably assume that if the price start to go down from here, one second, okay, it would also travel the same distance that it would use 44 trading days to complete the head and shoulder target. And this is why I would say that if you were to hold on to it, right, like right now, it could take in total of 45 trading days, which is until 5th of April to reach your target price. So if you really want to establish a short positions, right, first of all, establish your cut loss positions. What is your cut loss, which is the peak of the right shoulder? You want to short around the net line itself, and your profit target is about 270 pips itself. Is that good enough for you? And then are you willing to hold on for maybe 1 month plus until 5th of April for the price to reach your target price? So these are all the considerations that I would think to myself before I make a trade itself. I hope all this helped. Okay, we are running out of time. So thank you for joining us tonight. The next bi-weekly will be on Visa stock analysis, so please tune in for that. For all those unanswered questions, right, I will try to answer it in the chat room, or I will put it up in the YouTube comment section as well. So thank you all for joining us. I hope you have a good night. Thank you.